Boom shakalaka, what is going on everybody? Randall here from Crypto Love. In today's episode, I'm going to be talking about why the crypto or Bitcoin bear market is over. Now I know there's a lot of people who are saying there's no way this is over, and there's a lot of people who are saying maybe this is over, but I want to make this video declaring that yes, it is over, because in like a year or two from now, we're at the top, I want to say, hey, I called the bottom. Now we're going to get into all that and some news right after a message from our sponsor. All right, everybody, now happening today in the markets, coin market cap. The total market cap is $174 billion, pretty close to yesterday. Bitcoin dominance 50.8%, pretty close to yesterday as well. A lot of cryptos are popping up today. Even in the top 10, we have Bcash up almost 20%. The big gainers for today, IOST 26%, Insight Chain 24%, Dogecoin 21% after some Elon Musk cryptic tweets, Maximum Coin down, KuCoin shares down, and Augur down. Now also you may be noticing I'm talking in a different location. This is like a little phone booth, like a Clark Kent Superman style phone booth. The echo may be outrageous, so you have to let me know down in the description if it works, if it doesn't work. Just still trying to find an ideal place to record these videos. Oh, also should I say Bitcoin right over 5,000 at 50.26, Ethereum at 163, and XRP at 34 cents. Now, I've been watching some videos, doing some research, came across these thanks to Altcoin Daily, but I also watched a full video by Bob Lucas. The next 4-year cycle is started. He is 98% certain that the next 4-year cycle is started. And this goes along with something that I have been talking about previously related with the Bitcoin halving events, how that affects things. But he went on to do a lot further research, and basically it looks like this. We have bubbles and we have market consolidation. And basically the market consolidation lasts for about a year. The bubble phase lasts for about 3 years. Hence, 1 year plus 3 years equals 4 years total. Well, it turns out it looks like we're at the bottom. A little bit after bottom. The bottom was December. Now we're on our way back up. And if you take a look at this was the last one. So this was 2013, all the way down to a bottom in 2015, and then back up to the top in 2017, down to the bottom in 2018, and then starting to come back up. If you take a look, this orange line here, this is the 200-day moving average. Now you can see a lot of similarities here. How when we're in the red segment, the consolidation phase, a lot of the time we're below the 200-day moving average. But as things start to tick back up, we cross over the 200-day moving average, which we just did. Now we may duck back below it for a little bit, but eventually head up, going on back up. And the best news is, guess what? This green triangle we're in right now goes up to about $200,000 per Bitcoin. So who the heck cares what Bitcoin price is doing right now? But if you want more proof, if that's not proof enough for you, because a lot of you, I mean, there's going to be all types of comments down in the description. I know it for a fact because a lot of you are like, there's no way you could tell if bear market's happening. It's not a bear market. And well, I don't really care. I'm just making this video so in a couple years, when this was the bottom, I can just say, hey, this was the bottom. And if I was wrong, guess what? Who the hell cares? Price goes down a little bit more. I still trade based on the MACD. I don't really care what Bitcoin does because either way, I make money. But another reason is this. Looking at the weekly MACD. I know, I should just be like a MACD expert. I'll get that on my resume, MACD expert. But taking a look at the MACD on a weekly time frame, that actually gives a good indication of if we are in a bear trend or a bull trend. And basically works the same way as it does on a daily thing, except for with the weekly, it tells us the general trend of the market a little bit better than the daily MACD does. And as you can see, the orange line just crossed over the blue, or the blue crossed over the orange, meaning that we are in somewhat of a bullish trend. If we look previously, the bear trend started right around January of 2018, pretty much around when it started. So you can see that happened. Now, if you want to go back and test it with history, the previous one, the top was the end of 2013, and this one, it is a lagging indicator, so it's not going to say exactly when the bottom starts, exactly when the top is, but February 2014, yeah, that was pretty much the beginning of the bear market, which ended right around February of 2015. And if we take a look here, whoops, not there, here, February 2015, pretty close to, that'd be right here, pretty close to the bottom of that bubble square. Now, what's one more reason? One more reason is just the halvening coming. I've talked about this a whole bunch before. Generally about a year before the halvening, Bitcoin price starts to go up. We are a month away from a little bit over a month and a half from a year before the next halvening. May of 2020 is the next halvening. May of 2019 will be a year before. Potentially, price could start going back up. So those are my reasons why I'm calling the bottom of the green dildo, for those of you who like that, the bottom of the bear market. Bear market's over, bull market's starting, but it's going to go sideways for a while. It'll go sideways for a while. May not see things above 6,000, 7,000 for quite a while. May not, but it's going to go sideways. It's better than going down. Now, that's pretty much it for the reasons for why the bear market is over. On to the news today. Big news, I guess this is big news. 40 central banks are considering digital currencies, blockchain tech. That's a lot. So apparently, dozens of central banks around the world are currently or will soon be experimenting with central bank digital currencies, CBDCs, according to a recent report from the World Economic Forum. They said, a January 2019 report cited that at least 40 banks are conducting research projects and pilots with blockchain technology that aim to address such issues as financial inclusion, payment efficiency, and cybersecurity. Among the most noteworthy benefits of CBDC for the bank, the report lists the potential to improve know your customer and anti-money laundering procedures, reduce tax evasion, corruption, and illicit activities, challenge commercial bank monopoly power of retail deposits, and potentially provide alternatives to private sector payment technologies. So, they really want to get, because this is the hot topic now. All the banks realize they're losing. This is kind of like Blockbuster back when streaming video came out. They realize they're losing, and then they want to start climbing up. But is it too late? Probably not. They have a lot of power. They have a lot of connections. But really the reasons why they're doing this, because they don't want people to launder money. They want to be the money launderers. We saw reports this past week that some of the banks are some of the hugest money launderers out there. They don't want other people to do it. They want to be able to do it because that makes money for them. Now, critic Nouriel Roubini says that even though there are these CBDCs, they won't be on the blockchain. He says, as there's news about the CBDC issuance, the people in crypto get excited and say, see, it's becoming mainstream. But if you look carefully about what they want to do, if and when they're going to do it, it's not going to be blockchain. It's not going to be crypto. It's going to be a single ledger security. That makes a lot of sense because one of the greatest advantages of blockchain is censorship resistance. But that's not how banks make their money. Banks make their money by censoring the shit out of everything. You think they want to share their information with anybody? Absolutely not. So this report here, yeah, maybe a great report for whatever, but will central banks actually issue digital currency? Do we even need banks to issue digital currency? Do we need them to be inflating? Because I'll tell you one thing, looking at a chart like this tells me that a truly deflationary currency like Bitcoin is something that is pretty interesting. Hasn't been around ever before. We'll kind of see how it turns out. Now, that's pretty much it for the episode today. Guys, if you want to check out Signal Profits, a lot of you guys have been asking if it is worthwhile. Yes and no. It depends. You need to be trading with at least $3,000, so it's not for everybody. You also need to trade correctly on there, and they have tutorials to teach you how to do that. I will post down in the description a link to a YouTube video showing testimonials from actual Signal Profits users. But, they do make a lot of good calls, including, look at this. They did call this recent Bitcoin spike. Had you have been a Signals Profit member, you could have taken full advantage of the Bitcoin pump, in case you missed it. Also, make sure you check out the Monarch wallet. Holds 1,900 cryptocurrencies. You can earn interest on your cryptos in fiat to fiat. No, Bitcoin to fiat pairings. I just created a word, fiat. Just call me fiat daily. All right? Love you guys very much. Have a good one. All right? Peace.